So we'll talk about, obviously start with the economy, and then we'll get into Michael's.
Yes, okay.
So here we go. Hi, I'm Ralph Baker, and I'm a self-styled expert in all things Donald Trump. I started Trump and the G a couple of years ago to help to bring entrepreneurs and politicians and pollsters, economists, real estate developers together to activist pundits to discuss the president's policy impact the economy and the community. Now we're going to try to do it bi-weekly to be a little more current. It's a little more user-friendly now because we can get more people involved now that we're online. But over the past month or so, GameStop, Reddit, and Wall Street bets have dominated the financial news cycle. Wall Street bets and millions of individual investors created a short squeeze within GameStop, and it cost short sellers and hedge fund managers billions of dollars. Melvin Capital and Citadel lost billions of dollars. It caused Citron Research, a well-known short seller, to close a short position to actually rethink his business strategy. I'm not sure Citron is going to sell short stocks anymore. They changed their strategy after GameStop. And I thought it was a great strategy by these individual investors, how they sort of outsmarted the smart money. And along came Elizabeth Warren and Joe Biden to ask the SEC to get involved and to find out why, how these individuals are manipulating the stock. Steve Leisman from CNBC actually questioned the Federal Reserve about it, and ultimately Robinhood restricted trading in some of these shares, and the stock started to drop and allowed the big boys to cover their position. 2 weeks ago, Apollo, which is owned by Leon Black, a famed investor who I've been aware of for years, acquired Michael's companies for $22 a share, about $3 billion, I guess. And I think the stock is sorely undervalued. And this seems to be the inverse of GameStop, where you have the big boys who are fleecing individual investors. And the odd part about Michael's is that they announced the deal a day before earnings came out. And Michael's was expected to generate 5% revenue growth. They generated 11% revenue growth. Like a lot of arts and crafts companies, a lot of Etsy, which is an online marketplace that sells arts and crafts, they're growing like gangbusters. And I think Reddit's growth, its future growth, is not necessarily reflected in the stock and the share price. And I think if they had waited to earnings had come out, the stock would have gone past $22 a share. So I think it was very odd that they would announce the deal the day before earnings came out, a day before blowout earnings. They have what they call like a ghost shop clause where Etsy and management can go out and seek a better deal, but it seems kind of squirrely to me why management would agree to a deal like that the day before earnings. It makes me seem like management, they have a sweetheart deal in place. So to me, so we're gonna parse through that today. This is Trump and the GE, and we're going to discuss how Apollo and Leon Black finessed Michael's shareholders out of billions of dollars. So with me, I have Christopher Townley, the Brooklyn land baron. I'll let him introduce himself.
Greetings. Hi, I'm Christopher Townley, and I've been invited to talk with Ralph, and it's a pleasure to be here. It's interesting that also with Apollo, we have the scandal coming out about Leon Black, which, they're asking, he's going to step down, but of course not yet. He'll keep some of his power and certainly a lot of his money. I think he's worth about $8 billion. And it's very interesting what you're saying about the fleecing. I think it's in a way part of American history, and we wonder why certain people or officials are not investigating this situation. Michael sold in 2006 for $44 a share when it went private last time. So we keep saying that there's a history of it going public, going private, and I think that Blackstone Group just recently sold its last shares of Michael's for $10 a share.
Wow.
And not that recent, but not really that long ago. But I mean, that's to 15 years ago went for $44 a share, and you've done your homework, obviously, because you've made comparisons like an appraiser, whereby we look at earnings and certain companies, and I'll let you talk about that because you did all that work, but certain companies are going for a multiple times earnings much higher than the indicated price of $22 a share, which they're flouting as a 47% premium, which would make it $15 a share. So I'd like you to explain that because you've done more in-depth work on it. But thank you for having me on your again.
Right. So I think the situation with Michaels is that, like a lot of retailers, they had to close down certain of their stores during the pandemic, and so the pandemic really hurt a lot of retail's revenue for a lot of retailers. And as you know, the retailers have had to make the adjustment from physical locations to selling more online. Some have been more successful at it than others, like Target has been very successful at it. Walmart, Lululemon have been very successful at it. Some have been late to the party, like Bed Bath and Beyond, which I think is turning the corner. But Etsy didn't really have a strong online presence. They hired an executive from Walmart about a little over a year ago, and he brought a digital expertise to Etsy. Excuse me, to Michaels. They beefed up their online, their digital platform. They invested. They started offering amenities like buy online and pick up in store, which a lot of retailers are doing. They've offered 1 day shipping to compete better with Amazon and Target and Walmart. I don't think that's necessarily reflected in the numbers. I think over the past couple quarters, their digital platform has been growing like a bad weed. I think the October quarter, the digital revenue grew like over 100, like 128%.
Yeah.
And that, I think that's I think that's due to the success of that executive they brought on Buchanan from Walmart. And it's still the revenue was still digital revenue was still less than 10% of total revenue. So the digital platform is really taking off now, and also the fact that the as the economy reopens, I think you can see Michaels earn even more money. So I think Blackstone is buying Michaels at a very sensitive time where its future earnings power and future revenue growth, I don't think is really reflected in current numbers because as the economy reopens, the revenue should grow faster and the digital platform should take off a lot more. So I think the digital platform is not, how can I put it, is undervalued in this current price. So for instance, let's go through some of the numbers. Uh, Michael's and for the January quarter earned about generated a revenue of about over the past fiscal year generated revenue about $5.23 billion. EBITDA earnings before interest, taxes, depreciation, and amortization of about $696 million. I think that's what Apollo is valuing the company off of. It's basically like 6.3 times uh, last 12 months EBITDA. But I think a couple of things. I think if you look at what I call like run rate EBITDA, I think their run rate is a lot more robust. I think if you look at the past 2 quarters, their revenue has been more robust. The EBITDA has been more robust. So on a run rate basis, I think their revenue is more like $5.7 billion, and the EBITDA is more like 885 million. And then the other thing is that the digital platform is about 10% of revenue, about 10% of the business. And Etsy, which is an online marketplace, uh, which sells arts and crafts online, and it's just strictly digital. It's trades at about 50 times EBITDA. It's been growing like gangbusters. So if you valued 10% of Michael's EBITDA based on Etsy's valuation of like maybe, which I valued at 28 times, like half of that, and valued the rest of the business at 6.3 times, I think you get a share price of about $44 a share. But to make a long story short, I think the Etsy's future revenue earnings growth is not reflected in the current earnings because the economy is not fully reopened. And then secondly, I think the digital platform is totally undervalued because if it should be valued closer to where Etsy's trading at. So I think Apollo is buying Michael's at a very sensitive time where its earnings power is not quite reflected in the current share price. It's not quite reflected in the numbers. I think a year from now, the revenue EBITDA would be even more explosive. So, to me, this is almost like the anti-GameStop, where you have a private equity firm that's maybe undervaluing the shares of this company, and individual shareholders may be getting fleeced. I know they have to have a tender offer where they have to actually tender the shares. I've spoken to a couple individual shareholders who aren't sure they're going to tender their shares. I know a couple individual shareholders are not quite happy with the current share price. Management and their advisors, like I said, have a go shop clause where they can actually go out and find other interested parties that may want to make a higher bid. But if management is willing to accept this offer a day before blowout earnings, I wonder if management's extremely eager to go out and seek a higher bid. Maybe they could be in on this situation where they feel like they're getting a sweetheart deal individually, either stay on or performance package or what have you from Blackstone. Excuse me, from Apollo.
Yeah.
That's kind of my guess. Seems like it's kind of squirrely. It's my impression.
Well, it does. But let's see. I mean, that's my first impression of it. And it doesn't seem, when you're talking about such a phenomenon, people should be well educated into their value of what their assets are. And it doesn't seem like, particularly as you pointed out, that it's a day or so before earnings were demonstrated or made public, then how are they going to make a sound decision voting on something when they don't have enough information? So it does seem a bit offhanded. And I don't know, when we looked at the 2006 buyout of Michael's, we're looking at companies with $40 billion, $70 billion worth of managed funds. Apollo has $500 billion worth of funds that they manage, both institutional and private. And so $3 billion is nothing. So I'm wondering, how easy it's going to be to find another buyer within that 25-day, go shop period.
It just seems kind of, it seems kind of odd. I think Michael's is worth a lot more than what Apollo offered. But usually you would have maybe, for instance, if Apollo had shown interest and they hadn't accepted the offer the day before earnings came out, the share price probably could have gone to 25, 26, or 27, and it could have forced Apollo to make a higher bid. I would have thought Etsy would be a natural buyer for this because Etsy's they're, again, a lot of arts and crafts companies, their online businesses, the e-commerce businesses are going through the roof. For some reason, like a lot of arts and crafts entrepreneurs are selling more online. You have people buying supplies for arts and crafts through these stores, and so it's almost like a pandemic type play. For
That's
one,
exactly what it is.
and people are questioning whether Etsy's revenue is going to slow down once the pandemic ends. The thing about Michaels is that they have physical locations as well, so they can do both. I think the digital platforms is nascent right now. It's less than 10% of revenue, but they also have stores so that even if the economy reopens and people buy through stores, I think they can benefit from that as well. So it'd be a natural play for Etsy because they could acquire a company like Michaels and use get more revenue through have a presence through physical locations. They could also use potentially use Michaels stores as fulfillment centers.
That's
So
right, and that's what we're going to see.
a lot of the jewel for a lot of these companies with physical locations, whether it's Target or Walmart or Bed Bath and Beyond, is that they can use their stores as fulfillment centers where people can buy online and pick up in the store. You have a lot of buildings and a lot of stores in urban locations in dense areas. People can go into, again, they can buy online and go to a store a few blocks away and pick up in store. And that, I think people like those type of services, they like those type of amenities. And I'm not sure Etsy can offer that right now, but with the acquisition of Michaels, they could use those stores as fulfillment centers. So it seems like Etsy would be a natural acquire a store like Michael's, in my opinion.
I agree with you on a number of counts. I do see retail changing as primarily in a company like Michael's because they have over 1,200 stores. So what they have done is they've interfaced the digital with the retail. So you can track a package, or you can track inventory in a store, or you can track it online, have something delivered, and you can shift from retail to digital and back and forth. So it's very user friendly, and I think the having something delivered to a store, a fulfillment center, it's different than a store, but a couple of blocks away is key because people want immediate gratification. The other thing is that with the pandemic, we've seen. Even before it, we've seen a shift in office and retail, where we had WeWork and shared spaces. We had pop-up stores. We see a shift in the whole real estate usage, and I think that that the fact that people are staying in, they're paying more money. They're buying more products for the do-it-yourselfer, fix up the place yourself, and those products are going to sell. And the platforms are new, and they're taken off, like you have pointed out, they're taken off like crazy. So with those two factors in mind, that Michael's is going to take off for those two reasons. Each one of those reasons is valid on its own behalf, on its own merit.
Right. So I think Michael's, in my opinion, seems like it's turning the corner in terms of being able to prove they can compete in a digital world. When you have revenue growing at over 100% per quarter,
Yep.
I mean, year over year, I think they've proven that they've turned the corner. Their digital sales they were not divulged in a recent earnings report, and management didn't have an earnings call to explain.
Yeah, but why?
They didn't have an earnings call, nothing to explain why they took this deal, or
Yeah.
what the plan was to maybe seek a higher bid. So it kind of like doesn't seem too shareholder friendly in my opinion. But I'm kind of getting used to this sort of world where people just only buy online. Where I live now, I feel like a personal fulfillment center. Everybody in the area where I live only buy online.
Yep.
And UPS, FedEx is on my block 7 days a week just delivering stuff.
Yeah, even the post office delivers at 9 o'clock at night.
Right. Even on Sundays, it's like
Yeah.
crazy. So it's like this. For younger people, I don't think I mean, I'm not sure they would know what the inside of a store looked like, to be honest with you.
Yeah, I agree, and I'm kind of old-fashioned. I like to try the shoes on.
Right.
But so and interesting how that keys into the real estate market, because those people are not paying rent; they're paying trucking fees. So you order something online, they're paying the trucker. He's delivering it. Look at the concierge at high-rise buildings. Their mailroom is just always busy. They're always doing packages, right? Mm-hmm. So that whole thing's shifting. The whole usage thing is shifting.
And I'm not sure what that means for commercial real estate. Because having commercial real estate a couple of years ago was the place to be. I'm not sure whether how many people will actually return to offices after the pandemic ends.
Well, yeah, I don't know. What we've seen, there's a couple of things that we've seen before the pandemic, and that is a growth of digital shopping before. And so we've seen a lot of vacancies. Now what we see is a lot of ghost kitchens. So there are kitchens set up in former restaurants that are only set up to deliver. So we have Uber Eats. We have how many bicycles? Did you remember 10 years ago? Did you see so many bicycles? They were messengers, but now people are delivering. I've seen cars that are they look like UPS or FedEx drivers. They're cars full of packages and they're making deliveries. That's what you're seeing. So the way that trickles down into commercial real estate is vacancies.
Yeah, I almost got hit by a couple these guys on bicycles over the past week. I almost got run over a couple times. They just always on the block. They're always on the street, and they seem like they're always in a hurry. Especially at night, they have like the light, the flashlight or whatever, and they come out. They come out of nowhere.
And on the sidewalk.
Yeah, but so again, I think that someone like an Etsy that has a digital presence but doesn't have physical locations would be a natural buyer for Michaels. or maybe
Yeah.
another potential online, another potential retailer that has a big online presence that may not have this product line, may not sell arts and crafts, will be a potential
Right.
buyer. But I think that Apollo is saying it's a 47% premium to where it was trading prior, maybe a couple of weeks ago,
Right.
before there was interest in there was known interest in the company. But in my opinion, I think they're kind of getting a steal, and nobody's really talking about it. But when GameStop, excuse me, when Wall Street Bets and Reddit and these individual traders created a spike in GameStop, all of a sudden, there was it seemed like they were manipulating the market, and all of a sudden there were these policymakers and the corporate media just kept the name of GameStop in the news, but nobody's talking about Michaels. I find it kind of odd.
I think people are surprised to see it. They're comparing it to IKEA or something like that, and they're not looking at the earnings
Right.
or the earnings potential, the growth because of the phenomenon that's taking place right now in the real estate market and in the purchasing market.
Right, and the fact that this guy, the guy who came from Walmart, he's only been there maybe a little over a year, and he's just
Yeah.
kind of like doing his magic. It's not quite. I don't think its potential revenue growth from a digital standpoint is again. I don't think it's reflected in the financial results. I know like a few shareholders are upset about it, but the corporate media hasn't really talked about it. It seemed like an odd sale process. And I know they have a ghost shop clause and all that, but it seemed like an odd sale process. No, I thought there was the strangest thing I ever seen to have a company that's been acquired day before earnings. And I guess it seems obvious that Apollo would have seen those earnings prior to those earnings haven't been released. My guess.
I think that somebody, whether it's shady or not shady, somebody's doing their homework because I predict that's going to go public in a couple of years, and they'll do an IPO and raise that money back, and they'll make an incredible profit on it. It'll be worth a lot more than $44. I mean, a lot more than $22 a share.
Right, and they'll probably do some analysis what we're looking at earlier, where they're probably going to say that, and maybe in 2 or 3 years, maybe the digital revenue and digital earnings could be 25% or 30% of total
Right.
revenue, and they'll say, oh, 30% of the business should be valued similar to Etsy, which is a pure play e-commerce provider, and the other
Yes.
70% should be valued as a regular retailer. So they're gonna take it private and take it public again, and then try to spin it as more of a digital play, and
Yep.
that's a bricks and mortar play, which I thought management should be doing right now instead of waiting.
It's certainly peculiar that they're not doing that. It feels like either it's up and up and they're not looking anew at the situation, or somebody is getting a sweetheart deal somewhere along the line. Somebody's going to be highly paid, or they're not paying attention.
Okay.
The management. I don't know. I don't know which, but it does seem awful weird that this is not something, it's a few $1 billion, so it should be on the radar. And they're underpaying a few $1 billion potentially, maybe $3 billion undervalued,
Right,
half.
right, exactly, and that may even be conservative. 'Cause I
Yeah,
took a haircut to where Etsy's trading, and it took 10% of the EBITDA and said, let's say it traded 28 times to 56 times. You know what I
right.
mean?
20.
And I know that they've had a law firm that's filed a complaint. It hasn't gotten much publicity. I know that they're doing a tender offer for the shares, and we'll see how many individual shareholders actually tender their shares. But if enough tender, I'm not quite sure how much power a few individuals actually have. I think it's kind of odd that this hasn't been on the radar of the corporate media, and you don't want to sound what's the word I'm looking for? Suspicious, but when a bunch of individuals make money at the expense of hedge fund managers, it's all over the news. But when
Right.
when the big boys get one over on the individuals, it's crickets.
You don't hear about it.
Right. Right. And so I think it's kind of, in my opinion, it kind of goes into like this thing where I think a lot of individuals may feel that these big, you have these big institutions that kind of control our lives, whether it's the hedge
Yeah.
fund managers, the real estate developers, the private equity firms, the politicians, or the corporate media. That there's no
Yes.
way to kind of fight back. And what happens when people feel like their voices aren't heard? What happens then? Is that
Well, we see that very commonly. I mean, you can look at the. I think people are getting $1,400 or something. Now, it's estimated that the per taxpayer share of the relief package, the trillions of dollars that are being in relief, is $41,000.
repeat that? Repeat that.
So, so there's a loan to borrow that trillions of dollars to do the pandemic
Hmm.
relief, and you and I are getting $1,400. But our personal responsibility for the amount of the pandemic relief is 41,000.
Okay.
So where's that the difference? So you say, okay, let's say call it we're getting 2,000. Where's that other 39,000 going? And so that was the whole point. And it's related to what you're saying, because we're not being heard. The big boys are getting. There's a lot of money going out there for the pandemic relief that has nothing to do with the pandemic.
Uh huh.
There are state budgets that they're really bankrupt. They can't pay the pension funds, so now they're getting some of that money to be able to resurrect or keep their pension funds alive, so they can make good on the pensions. But there's a lot of money out there. $1,400, 41,000. That's the number that we're responsible each for $41,000. We got to pay that note off, and this is something we talked about a little bit about last week, where we have the financial industry that don't have money lending money to the government by printing it, and then we have to pay it back. So that's kind of the thing we're looking at, and I think we can point to, I think the earliest point in history where we saw the fleecing of the little guy was when Alexander Hamilton started the first bank of the U.S., and they took over all the state's debt. And this was a smokescreen, because really what was happening was that during the Revolutionary War, now this is where the little guy comes in, right? The soldiers weren't paid. The farmers that were the suppliers, the farmers and other suppliers of goods to the Continental Army were not being paid. And they received notes of debt saying the government owes you X. So what was happening, the Congress voted on the bill to start the first bank of the U.S., which included the passage of taking over the state's debts. So this congressman voted behind closed doors, and they passed a resolution. They passed a law to start the charter for the first bank of the U.S. So the investors were clamoring because the poor farmer and the ex-soldier, who was a farmer also, they were broke. So they were waiting for their payoff. So the investors were going and buying their notes for pennies on the dollar. And as we know, when you buy something at a discount, it's still worth its face value.
At some point. At some point, right?
Well, when the investors cashed it in, it was worth its
Like,
face value.
okay.
So, somebody was getting a nickel or a dime per dollar, the little guy, but then the big boys were coming in buying all the debt, and they got to cash it in at the face value of the debt. So we see it. Some people call it the birth of the investor class of the
Okay.
U.S. And it's an interesting phenomenon, and we see that. So that is similar, and I think it's part of our financial culture. When we talk about capitalism, we talk about industrial capitalism or trade capitalism. What we're talking about now is financial capitalism, and it's the big boys that are running the show.
Right. This is
The one, as you pointed out,
right back in. So I followed Leon Black's career for a while. I was in business school. He comes from the Drexel Burnham tree.
Yeah.
With Michael Milk and Drexel and Leon Black. I read about Leon Black and Michael Milk and Carl Icahn, an African American by the name of Reginald Lewis. And when I was
Sure.
in college and business school, every young African American came to New York and wanted to do deals, thought they were going to become the next Reginald Lewis. Read about Donald Trump a lot what he was doing. It's kind of hard to describe how big these guys, how these guys are almost larger than life. They were suspended
Yeah.
and smoked big cigars or whatever. And that was all in the 80s, early 90s. There were these so-called deals where you could find hidden value. Maybe you could buy a tobacco company that had a lot of real estate, or something like that, some hidden value, or some steel company who had water rights, something like that. But this is a
Right.
situation where you have a retailer, a sleepy kind of retailer that has a digital platform that probably is undervalued.
There's your hidden
Right.
value.
Right. Exactly. And uh, again, I think it's kind of delves into this thing where people may feel like it's hard to fight back against the establishment, whether it's Michael shareholders, whether it's GameStop investors who feel like their trades were shut down by Robinhood and the SEC, or
Yeah.
whether it's the people, the Capitol riots, who feel like maybe their vote wasn't necessarily counted. So I think it kind of all kind of delves to, kind of meshes together a little bit. Was another example of individuals who maybe feel like they, whether it's real or imagined, feel like they're getting fleeced by the system.
Yeah.
So I mean,
And it's been going on.
right, and it's not, doesn't seem like it's going to stop anytime soon. Uh,
No. Well, it'd be interesting to see how this pans out. Whether they either somebody tries to go to court to stop the sale if they don't bring somebody in 25 days, or whether they do bring somebody in within 25 days to you know to shop it around, because this is certainly a lot of money to be made on that transaction.
right, they've had a law firm has already filed a lawsuit. I can't think of the law firm, but it's I don't know where it would go. They do that a lot when they sort of challenge the value of deals, or
Yeah.
when they challenge when a share price drops, from $100 to $2, and they want to get say that you cost shareholders a lot of money. I don't know where it would go, but without it being discussed in the corporate media, whether CNBC or Bloomberg, I just don't. I wonder, like, if another buyer will emerge, because a lot of these things are optics too. There's one company, I think it's called Party A, that just dropped out. They thought they were going to bid and said no, we're not going to bid for Michaels. But a lot of it's
Huh.
optics. If you work for a big corporation, your whole goal is to keep your job. And so
Yeah.
if every media outlet saying, "Oh, Michael's is worth $40 a share, $45 a share, somebody should buy it," maybe that could induce someone to take a look at it. But unless the media's writing about it, you have to have a pretty strong constitution, I think, to maybe make a higher bid. I'm just surprised that Etsy hasn't made a move yet. To be honest with you.
I am too, and I'm surprised that there's not more publicity about it. Maybe we'll see that, but are people sleeping, or are they just not used to are they not used to this phenomenon about the growth in digital marketing?
I don't think anybody's talking about it because, again, Michael's digital presence was practically non-existent about a year ago, and
Right. I mean, people were suffering because they consider them retail,
well,
right?
they also didn't. Well, some of the retailers had a trouble making the transition to online, and
Right.
again, Target and Walmart were, and Lululemon were strong at it, but Michael's was kind of late to the game, and I think they're catching up pretty quickly. And I don't
Yes.
think it shows up in the share price, and no analysts are sticking their neck out saying that it's undervalued. No Wall Street analysts.
They want to keep their job, right?
Well, yeah, I mean, you don't want to be cynical, but it seemed like they serve the hedge fund managers and the private equity firms. And it seems like even the media are they going to really go against Leon Black? Will CNBC go
Yeah.
against Leon Black? They don't have a problem going against the individuals who created short squeeze and GameStop, but will they go against Leon Black, who is kind of part of the establishment right now? When you've been doing private equity that long, and you have a portfolio that big, and he has his tentacles go wide. You're talking about he comes from the Drexel Brennan tree of Michael Milken.
Yeah.
He probably knows everybody at this point. And
Right.
the scandal with Jeffrey Epstein seems to have kind of gone away. I think people kind of what I mean, it's kind of gone away that he's kind of like stepped out of the limelight a little bit. He's still involved with the company, but nobody's talking about Jeffrey Epstein anymore. Whether it's with Apollo or with Victoria's Secret.
Right. They're still saying he committed suicide again.
Oh, Jeffrey Epstein. Okay.
Yeah. But you're right. Yeah, it's kind of gone away. But I mean, it looks like he's paid him $158 million. Leon Black paid Epstein 158 million. That's a few ducats.
Right, right. I didn't really read a lot of detail into that. I was afraid of what I would find out. To be honest, to be honest with you, just like I.
Yeah. Well, I was just reading the
Right,
periphery because I'm interested to see how far those tentacles do reach, and where that could end up. It's always interesting to see what cause and effect of
right. How
things.
many with that airplane with the Lolita? How many
Yeah,
names?
yeah, yeah. Lolita
How many
Express.
people on that flight log? I don't.
Yeah.
I'm afraid to watch to look. To be honest with you.
Me too. You might be
No,
on there.
no,
I don't
oh
know.
no, no. But no,
I'm
no.
teasing. I'm
But
sorry.
I got left. I got left. I tried to get on. They left me at the runway. But
Yeah.
uh, even with same thing with that relief package from Biden. I'm afraid to read what's in there half the time. I want
Yeah, yeah.
as far as how much pork is in there. But again, I think this when I first saw the Michaels transaction, I was kind of taken aback by it. And I thought like, wow, this is like another example of you know these these big institutions again, whether it's Congress or the corporate media, what have you, that control our lives. And I thought it'd be more there would be more scandalous, especially after the you had the Capitol riots down in D.C. from a couple months ago.
Yeah. Yeah. I just don't know what to think if it's malfeasance or if it's people are not used to the change in this particular instance to digital and how impactful and important that is.
Right.
I mean, it seems like they should be, but I don't think they are, or I don't know. I just
Right,
don't know.
right. It's just that something that seems like normal course where you have again with GameStop, you have a bunch of individuals who are smart, the big boys, that became like a media firestorm out the clear blue sky. I never expected that to happen. Where I was
Yeah.
expecting something like this would have caught the media attention. Where again, the individuals when they kind of outsmart the smart money, it becomes like a big media firestorm for some odd reason. That surprised me.
No, it does. I agree with you 100%.
But I guess from a 20,000 foot level, I mean, do you see this as a sort of a trend in terms of uh, it's with so many millions of Americans who rely on government assistance, it's almost hard to really complain against. You may not have you may not have the political capital to actually complain against the big boys, whether it's the Federal Reserve or Congress or what have you, because so many people are in need of aid. I guess maybe going forward. That's sort of my impression.
Yeah.
What do you think of that?
It. I think the problem with that is that the aid that people get is going to be worth so much less because, let me restate that. The aid that people get, yes, it's going to have less buying power very soon because of the amount of debt that we've incurred. And so to me, when you're saying that people need money so they print more money, it's almost like planned counterfeit. And the way to bust a country's economy is to print. That's what they did during wartime. They printed counterfeit. They've infused too much cash into the economy, and that would be one way to bankrupt a country, an enemy. And so what we see is when we see the lenders lending the government money, the Federal Reserve, they don't have the money, they print it. So when you infuse the economy with all this cash, the money becomes worth less. And so the people that are on a fixed income or that need aid, they're on a certain amount. And so that amount has less buying power. And you're going to see that with the increase in minimum wage. They're talking about a $15 minimum wage. Now historically, wages are the last thing to go up. And as soon as wages go up, then other things start to go up. What we need to see more than a minimum wage increase is increased buying power. And there's ways to increase buying power. So, for example, a higher net income. I know a lot of people don't pay tax because they don't make enough money, but that money is becoming worth less and less and less, and we're not in keeping with inflation in terms of buying power. So, and we see it in a couple of other ways. And if there's a great book by Steven Zorlanga called The Lost Science of Money, and he in the book, and Alexander Del Mar talks about it also. There was what they call the gold and silver dichotomy, and so the owners of when money was a commodity, either gold or silver. It was worth more. Silver was worth more in the East, like India, and gold was worth more in the West. So you had certain people trading currencies. They would go with gold. They would go with silver from the West and go buy gold in the East, and they'd get twice as much money for the silver in gold. Yes, something like that. But what we're seeing, in a way, now, a lot of classical economists, even Adam Smith, the thing that dictates value is labor. So we have a system here. Let's say an engineer. Let's say an engineer makes $100,000 a year. I don't know what an engineer makes, but let's just come up with that number. So that engineer goes to an American school, gets his degree in engineering, works and lives in America, and pays American prices for things. So then somebody decides to outsource his job to India, where the guy makes $10,000 a year. So basically, that's almost the same thing as trading or being an arbitrage, trading commodity money.
Repeat that one more time.
So when we outsource jobs, because and in fact, Ford is saying that they're going to do a nearly $1 billion plant in Mexico. They're threatening the UAW. I read that today. So basically, when you outsource jobs, you're taking a person that's in an American system, and I'm talking about outsourcing American jobs. So you're taking someone who's living in an American system. Maybe they have student debt from American banks. They have a mortgage from an American company. They have an American house. They drive they drive a car on American highways, et cetera, et cetera. And then when you outsource their job, that maybe it's $100,000 a year to stay afloat in that system, you trade that job for $15,000 a year in India, then you make that guy go bankrupt, or you make him do something else for far less money. And so that, to me, is very similar to the gold and silver dichotomy that we saw pre-Roman, talking about Babylon, So we're seeing that kind of thing, because even though we could say that gold and silver could be traded for money, labor is really the equalizer, and that's a thing that can be traded for money. But there are different systems. So we see the little guy his job's getting outsourced. So again, it's the little guy getting mauled over by the big guy. So I see that as related to what you're saying.
I didn't cut you off. Yeah, I was saying that a lot of people talk about the value of dollars will go down as you print more dollars, and I think you see maybe inflation, or maybe eating to people's purchasing power. Could you speak to those two things? I mean, in terms of the value of the dollar, we print so many dollars out there, the dollar could become worth less over time.
Yes. Well, it is worth less over time. I mean, look at a car. My father bought a 1960 Volkswagen for $1,200. They're probably $20,000 now. I mean, they're different, and they're more technology and so on and so forth. The wages were much less than, but people could afford to buy a house. Now you can't, and so that's a steady thing. There's and depending on what they measure, what are the meters for measuring inflation? It's the buying power, and what can you buy with it? And we talked about it last time about people not being able to afford to buy the things they make, or the jobs that are created are not living wages. So I don't mean to rehash old stuff, but that's all related to what we're talking about.
Well, let's say, for instance, I'm not sure what you call it, but I'm sure it's some type of leverage within the system where I don't want to see GameStop go to $500 a share. So I can complain to CNBC, get them to talk about it. I can complain to the Federal Reserve. I can complain to the SEC. I can complain to Elizabeth Warren to get her to complain to the SEC. I don't
Sure.
want to see GameStop go to $500 a share, but I don't want to see Michaels go to $40 a share. I'm sure there's some type of leverage in the system. I'm not quite what you call that, but or some type of influence, where as a private equity
Yes.
firm or a hedge fund manager or a venture capital firm, it's not necessarily maybe money, but maybe putting money in the right places, influence in the right places where I don't want to see GameStop go to $500. I can prevent that, and I don't want to see Michaels go to
Yes.
$50. So I can prevent that. So it's almost like some type of
Right.
hidden type of leverage. I
Leverage.
think you talked about how last time how a lot of times democracy happens, or capitalism happens outside the system. So it
That's
seems
right.
like it's
Yeah.
kind of like the amount of influence. I don't know what you call it. Not necessarily in your face, but it seems like it's in sort of hidden in the system, built into the system where these the powers that be have so much influence that something as simple as manipulating share prices behind the scenes almost.
I agree with you. And if you look at the first bank in the United States, that's exactly what happened. They were borrowing money from the bank to buy the shares in the bank. They were key people, key financial people. And Alexander Hamilton would say, though, that's what makes some people be able to earn more than others. It's their spheres of influence. It's their influence on the system. It's their right. So he totally agreed with the people that could buy the debt that was owed to the farmers and the merchants at a discount, because that's their college education taught them how to do that, or their
Right,
birthright
right.
taught
And
them how to
so
do that. You know.
you kind of get a sense that maybe in some ways that when I came out of college, maybe the opportunity to I guess live the live the I don't maybe I noticed it more. I'm not sure, but maybe it's an opportunity to live the American dream or enjoy the fruits of your labor or enjoy the American dream. Seems like there's a lot more, almost a lot more impediments almost to me. It seems like a lot more impediments today than there were when I came out of college for some reason. That you actually see this influence working. It's almost like in your face, almost
Yes.
in your face.
There is a huge, there's a growth and impediment from when you, I mean, you're not that old, but from when you started then now, I was leasing an apartment to somebody, and it was three graduate doctors sharing a two-bedroom apartment. You know,
Hmm.
they were making it a three-bedroom apartment. There were in the same building three MBA guys, money guys, finance guys, and they were sharing an apartment. They couldn't afford to rent to have it by themselves, and they were making, in the aggregate, they were
Hmm.
making some coin, but they couldn't afford to rent, even though they were getting good salaries, what I
Hmm.
would consider a good salary. They were sharing, and so we see people in that sense, the standard of living going down, which means they have less buying power. So
Right.
it's
So it's
definitely
almost
in your
like the
face.
as we become more of an oligarchy, it seems like it's more like these big institutions wielding power, and they're not even they kind of almost brazen about it. You know what I mean? It's like they've
Yeah,
got
yeah,
openly asking openly asking Elizabeth Warren openly asking SEC to get involved to do something about GameStop, but nobody's talking about Michaels per se. And I think it's at some point it just I guess maybe it's another sort of I wouldn't say a trigger point, but when I think about again the Capitol riots, when I think about the events that happened when Trump was in office with George Floyd and all these people protesting, it's almost like
right.
it's almost like I wouldn't say never ending, but it seems like it's just another trigger point to say, look, we control this, and we can't, and you can't, you as an individual can't do much about it.
Yes, and you even have some of the right wing saying that it was a hoax. The Black Lives Matter and Mr. Floyd. He was an actor. I mean, it's the most amazing claims are being made to try to negate this
Right,
influence.
right. So, but so I just think as someone who when I came out of business school, I hear people talk about how the markets were rigged. I didn't believe it. I thought that was the craziest thing I ever heard. It, right,
Yeah.
right.
Well, now you believe it, right?
Right.
It's a
So I
possibility.
know a lot of people who didn't want to invest in the market said it was rigged, but now you see more of it kind of in your face, whether it's stock market, wherever you see. It seems like it's kind of rigged against individuals, and sort of more power is being consolidated within institutions. And I'm not quite sure what's going to happen after this pandemic ends. How whether it's still going to, whether the balance of power has even shifted more into the hands of institutions. I think people feel like it's kind of like a talking about conspiracy theories. I think a lot of people feel like this pandemic was maybe I wouldn't say manufactured, but the shutdown was maybe manufactured to help.
Well, I think that a lot of people think it was manufactured, not just the shutdown, but that in general. Whether it was or not, I can't say, but certainly the shutdown, I believe,
And
was.
the reaction to it.
And I think it. Well, I think that the reaction to it, yes, and I think that we can look at what has been happening before that. If we just look at that phenomenon as a point in time, or certain. So if that's a point in time, what was happening before that? Well, what was happening before that? The retail was already closing down because people were ordering online. So we had before that we had a pretty growing foreclosure rate, and so when you're closing people down, when you close the economy down, that just continues that phenomenon and exaggerates it. Now, what's going to happen when there's people who haven't paid rent in a year? So what's going to happen? So they've stalled evictions. So what happens when the landlord says, "Well, I can't pay my mortgage, so you got to pay a year's worth of rent"? So is somebody going to stay in business and just pay back rent for a year? They're not going to make any money being in business. They won't be able to pay other things that they need. So I see that as a problem we haven't dealt with yet. And printing some money to relieve people, it may be considered a good gesture. I think it's dealing with a symptom and not a root cause of it. And so I think that never does anybody any good. And we see, as I have said, the $1,400 that each taxpayer gets, or $700, whatever it is, each taxpayer is responsible for over $14,000. So again, not to be redundant, that is an example of the little guy now is an extraction of wealth, because that debt has to be paid back. That the mortgage payment that the building owner that rents to a restaurant, that mortgage has to be paid. Eventually, there has to be reconciliation of it, and you can't just print money to say, well, we'll just give you some money and you can pay everything back. There's got to be those books got to be balanced, and how
Well,
I don't
years
know
ago,
how
I
that's
thought
going to
that
happen.
if the government debt kept ballooning, that people wouldn't want to own our debt, and it would cause interest rates to spike. That hasn't happened. I think people feel like, in
Right.
some ways, if government debt is rising around the globe, the U.S. is still, relative to other countries, still may be the safest one of the safest places to invest.
Well, that's thanks to the petrodollar and the U.S. military. I mean, that's connected. So that's a whole other conversation that we
When you
should
say
probably
petrodollar,
have.
you mean like oil?
Oil. So there are those, and I am not an expert in it, but I read lots of different things. So the axis of evil, for example, let's say Saddam Hussein or Iran, they didn't want to trade their money, or Libya, they were not buying their excess, they were not accepting dollars for their oil. So we can also look at Noriega, the drug
Right.
dealer who was in the CIA's
Right.
pocket for quite a while. He was going to the Japanese to re-engineer the Panama Canal. That meant Bechtel, the largest engineering company in the world, the American company, predominantly, was not going to get that business.
Right.
So we'd take him out when he's put him in prison. So these things happen, and I say the petrodollars. If you don't do what we like, there's a good book. Did you read the Confessions of an
Yeah,
Economic
I read
Hitman?
it. Yeah.
Okay, so things like that. I don't say it's true and it's the Bible, but you have to read, and you do. I know you're very well read, but I read left-wing stuff, right-wing stuff, and so and when you read different things, you have to reconcile what you think is happening,
Right.
and it ain't what we're
I think
hearing.
on that to that point, I think China
Excuse the expression.
has been very busy in terms of trying to promote its own currency relative to the U.S. I think when they were buying oil, I think they were. I know they've been making loans to a lot of South American countries, and I think they're asking to be paid back
Yes,
in Chinese currency or what have you. I think that's a way of
yes,
buying influence around the globe, and it will not only are they buying oil from these countries, but they're also making loans to countries that may be having financial straits. I know in the Caribbean, I'm not quite sure which country. I want them to speak. I think it's maybe Jamaica. Well, I heard a song called "The Day the Dollar Died," and everybody was singing
I
it,
love.
and they knew it by heart. And that song came on, they were so happy. I was at a party one time, and "The Day the Dollar Died" came on, and these people were singing that song, and I was like, "What is that?" And so it's well known
Yeah,
outside the United States that there's a lot of talk of getting off the U.S. Stop using the U.S. currency around the globe. How
yes.
successful people will be at it, I'm not sure, but I know that Gaddafi talked about it. All of a sudden, things 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 change. Yeah, things change.
Well, it's things change. Yeah, yeah. And so there are those that say that the demand for the dollar is propped up by the currency being accepted to, in exchange for oil, and that is what helps us maintain such a high military budget because there's a demand for dollars and that money coming in. So it has to be looked at. And I'm not saying it is, and
Hmm.
it's not necessarily my area of expertise, but when I keep reading things about it, I have to listen to it um, with and to take it in as I judge how things are working
Yeah, but
or how they're
again, back to
functioning.
my earlier point, I assume that so much the ballooning U.S. debt would cause people not to want maybe to ask more, to be paid higher, be paid more for us um, to buy our debt or to lend money to us. I guess it just hasn't happened. I think it's a combination of
Yes,
maybe other country, relative to other countries, we may be considered safe, and also the fact that the Federal Reserve has also stepped in to central banks around the world, around the globe, are doing it, stepped in to keep interest rate low, to like buy treasuries to keep rates low. So I'm
yes, and eventually
right.
that's got to reconcile. That's what I'm saying. And so we're keeping the economy afloat by printing more money or by borrowing more money, which is like printing more money. So that's what I was saying before. You can't just keep printing money. You're dealing with a symptom. We have to deal with the cause, and it all has to do with living wages, jobs that pay a living wage, that are making things that are worthwhile to have. Some things are just not worthwhile to have.
Right.
You're
And
creating junk,
we also think we're also
and
propping up failed
so
business models. So it
I
kind of
agree
delves
with that
into
100.
what
Yes.
maybe making junk, but are we willing to let the junk makers go under for maybe a better business model down the road?
Well, that might be out of necessity because on the one side we have, as you mentioned, more of an oligarchy situation where the wealth is being concentrated into fewer and fewer hands, and it continues to snowball. So you have what's Bezos worth? How many $100 billion is he worth? 180 billion, two
It's
hundred
not a
billion?
lot, a lot.
A lot. The what's the name? I forget the name of the salt company. There's a family. I'll think of it. I'm sorry, I don't want to talk about it because I can't remember the name. But all the family members are making a few $1 billion a year. They own something like 90% of
Wow.
the world's salt supply. And it's family owned. They own more than 50% of the stock in the business. They're really in the agricultural business, but it's. I'll think about it and I'll email you the name. But these things we should talk about because this affects everything. All that wealth. How does somebody come to own that? How does even when we have a fellow name of
Hmm?
Cecil Rhodes,
Yeah.
he started the De Beers Mining Company. How did the De Beers Mining Company own all the diamonds of South Africa? It's to keep those people,
Right.
the natives of those countries should be owning that to further their own well-being. They own the assets, and that's related to what you're talking about in China, because what China is also doing is they're lending money, but they're taking leases on land. So I know them on the land baron here. So what that actually means is that they're leasing the
Right.
assets, the raw materials, whether it be lithium, whatever it is. And so what we say in classical economics is only land earns rent, and land includes all natural resources. So the lithium that has still in the ground, the gold that's still in the ground, the oil that's still in the ground, that's all land. And that's rent.
Uh-huh.
The revenue from that is rent, technically. So when we see China, and we also see the
I heard,
IMF
I
doing
heard,
it,
I heard the Clintons were doing it somewhat too.
they go in.
I heard the Clintons were doing it somewhat
The
too
what?
through their some type of foundation that they own.
That's right.
Right.
And also the central banks are doing it. So what they do is they're really mortgaging the assets of the country and taking back a mortgage so that they own the raw materials, which is land. And so that's what China's doing. They have leases with many countries, and so the lease
Right.
payments are sort of the subsidies that they pay, and the benefit that they get out of the
Right.
leasehold
They
is
have they don't
the
have
raw
as much raw
materials.
materials as the U.S. does, but they can go out and rent raw materials
No,
in Africa or I guess in the Caribbean or Latin America. Right. Right. And so
that's
they've
what they do. Yep.
been almost pretty smart in that well, I think the U.S. and um, relative to China, the U.S. and Russia have, in my opinion, kind of war weary, where we spend so much money on the military and we spend so much money in wars, where China's spending money on expanding its, you know, and their raw material access to raw
Their
materials.
economy.
Um,
That's right, and also the standard of living for their people. I mean, I'm not condoning what they do, or I'm not condoning it. I'm just trying to notice what they
but
do.
but
But you hit
but
the nail right on the head. They're they're expanding their
right,
take of raw
right, and
materials,
so
which is land. It's a
I
land grab.
think as quiet as it's kept, I think a lot of institutions, like corporations, have gotten a reset because of the pandemic. I think they've gotten access to a very cheap cost of capital because the Federal Reserve stepped in and said we're going to support the credit markets. We're going to help drive it down, make interest rates lower,
Yes.
and help make it easier for corporations to borrow. A lot of them are already on the cusp, on the precipice of being considered junk debt because they borrowed so much cheap debt over the years.
Yeah.
It probably should have raised equity,
Yes.
but the debt was so cheap it was too enticing. You see companies like General Electric have access
Right.
to cheap debt, and then they can sell assets at elevated prices because the stock market is so high, and the stock market is valuing these assets at such a high level. Right, right, right. So
50 times earnings.
a lot of corporations
Yeah.
have benefited from the reaction to the pandemic because they have access to cheap debt, and it also can maybe raise equity to help shore up their balance sheet and help shore up liquidity, or sell assets at prices that with the math doesn't even make doesn't even make sense. I thought Michael's was
No, it doesn't make sense. Yeah.
Michael's was unrealistic. I think people selling assets at prices that the math doesn't even work. You know what I mean? And so General Electric's the company I follow. They're having
Yeah.
off assets that and the CEO's getting credit for being so smart. You're selling assets when the Dow's at over 30,000, 32,000, hit it to 33,000, and you're selling assets to fobbing off assets to buyers who I find it hard to believe they can get a return from those assets, and the stock market keeps going up. You see, you have a General Electric that's was
Yeah.
junk debt. Its debt profile becoming more it's improved now, but the debt profile was junk debt that should have been borrowed probably 12, 13, 14%. They were borrowing like 5% because the Federal Reserve stepped in and helped the credit markets. Right, right.
Right, so cheap, right? Yeah. Well, we see a lot of assets being sold, and that's another thing to talk about because under Trump it was coal, under Clinton it was the radio waves, under Michael Young, the son of Andrew Young, who was a UN secretary under Carter. Anyway, Michael Young was the head of the FCC, and they were auctioning off the radio waves. So the radio waves now people say, well, we're being censored. We can't say what we want to say. These people, their property, because they auction it off, we're looking at their property as the radio waves or the capacity for the
Right.
information highway. Let's say they own it. I don't know how that can be. That's like Cecil Rhodes owning the diamonds in South Africa. So it's already too late to say I'm being censored. We've already let those people own that and control that asset.
I think
You know what I mean?
the example of Cecil Rose is an excellent one because I think it's something if you guys fill up to. I think we should probably, if you had time to read I know you read it, but the other guys read the book and maybe discuss it because I think these small cadre of people controlling the media is something we've been talking about for years, but it's already happened historically with Cecil Rhodes. And the funny part
Right.
about it, I listened to a podcast a couple of days ago, and someone repeated what you said verbatim. So I was
Oh,
laughing.
really?
Yeah, they listened. That's it. I
They
was
must have watched
laughing.
your show.
I was like, what are the odds? What are the odds of someone discussing Cecil Rhodes and the importance of Cecil Rhodes? I thought that was hilarious, and they would listen. They would,
It's
right. I
amazing. Yeah,
think it's
Carol
something we should
Quigley's book is an excellent book on the
discuss.
subject.
Not necessarily we can discuss it specifically, and also how it applies today. Because the point I was trying to make last time was that you had these Newt Gingrich, Bob Dole, Phil Graham, Rush Limbaugh. They were just changing laws left and right. Let's get rid of Glass Steagall. That was 60 years ago. Let's allow corporations to buy up more media properties.
Yeah,
They were allowing the corporations to buy up more media properties. So now you
right.
probably have maybe 8 or 9 people who control 90% of what you see on TV, what you read in the newspaper, so on and so forth, so on and so forth. Which kind of gets to your point about the
That's
radio
the
wave.
point.
That's the point. That was
Yes.
the point I was trying to make. I didn't make it as clearly as you did, but when you can't it seemed like a Stone Ages when you watched Walter Cronkite or John Chancellor, David Brinkley deliver the news. And when Walter Cronkite
Right.
said something, I have my family was they watched Walter Cronkite. And if he didn't come on, we may have watched John
So
Chancellor.
did
We
I.
never ABC. We watched
Yeah.
NBC and CBS for some reason. But when Walter Cronkite said something, that was the end of it. That was it. And now there's no Walter Cronkite to deliver the
Yeah.
news anymore. I don't even watch
Yeah.
the news. I don't watch the news. If
I
I
don't.
want to talk about the news, I discuss this, do this event, or I'll watch other podcasts where people discuss events, or sort of independent people discussing events on YouTube or on podcasts and giving their viewpoint. But it seems like the media is just basically public relations and saying things for ratings and for entertainment purposes.
Yeah.
To me, right?
It's a diversion.
Maybe I'm naive, but I know they have to compete against a lot of other things with the internet and YouTube and Instagram and video games. Maybe they have to be entertaining to get ratings, but I think it's backfiring on people like Fox News and CNN. I don't watch CNN anymore. I don't even recognize it anymore.
I don't
Right,
watch it. I
right,
don't watch that. I don't
right.
watch
So
media
you
news.
almost
Major media. Not very often.
right.
Once
You
in a
almost have
while,
to
when
create
somebody
your
goes, "You
own
got to
news
watch
if
this,"
you
is
have something to
ridiculous.
say. You know what I'm saying?
Well, yes, and I read fringe publications, and I try right wing some of the most outrageous things, but somewhere you get a little gleam of truth. You glean something out of it, left wing and right wing. But basically, I see the big
Mhm.
media, left and right wing, as the same company, really, as the same force, and. It's all big business. It's all the big guys that control things against the little guy, and then
Right,
that was
right.
pretty much the thread that we've been talking about. But I agree with you. You have to look other places besides media. But I think people tend to get intellectually lazy, and so when I start talking about rent and what I mean, the guys glaze over, and I try to make it interesting, but people are not interested in hearing that. They would rather turn
Well,
the tube on
well, I think
and just sit back and vegetate. A
right.
lot of people, until something backfires, as you said, and then everybody gets on the bandwagon. And I think that might happen with Michaels. Nobody's saying anything about it, but if the right person brings it to their, if we bring it to, if someone is brought to the attention of the right person,
Right,
then
right,
they might
right.
have an
Because
influence and somebody will
it
look at it.
seems just kind of like if in a market where you're supposed to be transparency, and it just seems like an anomaly
Right.
that should never happen. I can understand a private transaction, but like for a public market transaction like this, where management seem like sort of in on it, it seemed kind of oddity. I never quite seen anything like that where they agreed to a deal a day before record earnings. You know what I mean?
It's amazing what you're saying. It's true. And we're not talking about added value. You can have a great idea and say, I'm going to add this to this, and that's gonna cause an
Hmm.
increase. So I'm doing something. I'm adding a value, right? Whether I renovate something or whatever. I mean, I'm doing nuts and bolts. But the added
Hmm.
value is already there with Michaels. We see it. They raised the internet or the
Right.
digital
Right. It went up
shopping
in
went up
October. The
100%,
quarter in
right, for the
October it
year.
went up over
So
120%.
that's
They didn't tell you. They didn't for the quarter ended July, January. They didn't tell you what it
right.
was. They didn't have a conference call, earnings conference call. So they didn't tell you. They didn't tell you how
That's
well it
right. They
did.
weren't going to have it anymore. Right. And why not? But just the point that it did go up points to the fact that that value added is already there, and it's already the effects of it are going to continue. So why are they treating it like the old way when before that added value? And then they can continue
Mhm.
to add value to increase the price, but
Mhm.
it's already in the
Right.
equation,
And
and
if
they're not
I
adding
when I
it to
was
the
major, so the
equation.
first thing my
That
professor,
increase.
Dr. Henley, my econ 101 class, he writes up on the board. People are rational, and so all economic theory is based on what a rational individual would do. And so if you assume people are rational and they're capitalists, somebody would, if there's a arbitrage there where the Michaels is worth, you know, enough, there's enough value there that somebody can maybe offer $30 or 35 or $40 a share. You would think that if Etsy or some other individual is rational and a capitalist, they would step in and make a higher bid. In the 80s, and you would see another corporate raider want to come in and it'd be like a bidding war in the 80s. But it seemed like the private equity firms are kind of more clubby now.
That's right.
They're more like collegial now. Seems to me, relative to the 80s.
Yeah. What's yeah.
Right.
I mean, I remember the '80s, and there were a lot of corporate raiding going on. Even well, then there was the whole that was the first Bush regime
Yeah.
was
Yeah. Yeah.
was remember the SNLs all went down.
Hmm.
That was again the little banks against the big
Right.
banks. But anyway, yeah, that was a whole different era. But it's still there's something fishy here, and I hope
Right. I thought it'd be interesting. I
it's
thought
going
it'd
to
be
be
something
interesting to watch it
little
play out. I
different from what
hope.
we usually do, but there'll be something interesting to talk about. Just chop, 'cause I think it also fits into
Yes.
this this thesis that these institutions that control our lives, where you have again, it's almost an inverse of GameStop, where you have individuals when they make a killing and they fleece the big
Right.
guys. It's a problem, and vice versa. It doesn't work in reverse. You don't have the power that beast up and say, "Oh, this can't happen." What's
Yeah.
going on with this? With this, there should be transparency over why senior management would sign a deal like this the day before earnings. Just like there should have been transparency on why GameStop is going from $19 one day to nearly 500 a month later. Everybody wants answers. You know what I mean? Um,
Yeah, I know.
right, right. But I think
Something wrong with that picture.
if you guys are up to, I think that book on Cecil Rhodes. I think that's something we should discuss at some point. Not the concept of how these small cadre of people control so much of the media and how it plays into today, and especially when you hear
It's the same thing.
this
Yeah.
concept that Donald Trump said, "Find the fraud, it never happened." That the Washington Post article, whoever
Yeah.
leaked that story, is total false. Trump never said that. and that was one of the reasons why they wanted to impeach the president,
Yeah.
impeach Trump. Right,
Well,
right.
they don't
So,
want him to run again
but
either.
anyway,
That's
I
it,
think
right?
I want to get your uh,
I'll
yeah,
get you
yeah,
a copy of that
yeah.
book. You can
I'll get
get
a
it
copy of
online.
it.
I'll talk to you about it.
But I think okay, I think it's
But you can get
I
it
think it's
online
something that at some point we should
for
all
no.
discuss
Yeah.
because it kind of like crystallizes what we've been talking about in terms of the media. I think I want to do something on the fake news in general, and also specifically on Cecil Rhodes and how these guys had controlled so much of the media and what it means today. I want to get your take on one parting shot on Michaels or the economy before we wrap up. I
Okay.
want to get your one parting shot on
So you
Michaels
want?
or the
I'm sorry. You want to
economy
get my
before we
take on
wrap
it?
up.
Okay. Well, again, basically, I see. We mentioned the two things really that with the pandemic relief program, and this is basically the thread of what we've been talking about, is that the little guy's getting about $1,000, but they're going to incur $14,000 worth of debt for that. So that speaks volumes for itself. So where did that other money go? Where does that $1.9 trillion go? That's that's a good question. And and the other thing is, I'm really interested, and I thank you very much for bringing Michaels to my attention, because I want to see how that plays out. I'm very interested in it, and I may dig a little deeper, which is I tend to do that sometimes, and to contact people to see what's up with that in terms of why nobody's hearing about it, because it's very interesting and it's very important. It's germane to how things are run, and it's a real influence. You have a company that has half a trillion dollars worth of assets that they manage, and that's a very powerful company. And why they're able to just pick up what I would estimate just from what I know, and I'm assuming everything's correct.
Right, it's a grab.
Three
It's a
three
grab.
billion
Another
dollars.
$3 billion.
Just it's a yeah,
Right,
3 billion.
right.
That's a few bucks, you know. So that's
Okay, in
that.
terms of Michaels, I
That's
think
what I. Those are the
someone
things I
follows the
have to say.
market. I think this shouldn't be tolerated. I mean, I'm just, you know, it's incredible that this is tolerated and this and you know all this communication we have out here, 1,000 cable stations and Twitter and Facebook and all this stuff. This should not be tolerated, and that you have no all these um, websites designed. I mean, set up to discuss the stock market. All these TV shows set up to discuss the market, and nobody's talking about this. But as soon as an individual, few individuals
Yeah,
make a few bucks at the expense of the big guys, it's national news, and they talk about it nonstop until somebody does something about it. It shouldn't be tolerated. As far as the economy, again, I think that I always thought the economy was a bubble looking for a pen. I think the pandemic provided that pen, and we'll see what happens when the economy reopens. But you know, we're going to continue to talk about it and try to track these these events, whether it's social unrest, whether it's events like Michael's or things that these big institutions that control our lives, whether it's the corporate media or the politicians, and how and bring these anomalies to the attention of the public. But again, I want to thank the land baron, Brooklyn land baron, for participating. Keep doing what you do. I mean, people are listening. People listening. People copy what you said. So I think it's hilarious. Um, they're pulling that. They're pulling that. They're pulling. They're trying on their
that's
best
great. I appreciate
Brooklyn
it.
land baron impersonation. So I think it's hilarious. But this has been
I
Trump and
appreciate.
GE and Apollo and Leon Black, finesse Michael shareholders. Again, be back in 2 weeks with something else to say. But there's no, even though there are no, may not be any Elizabeth Warren or Steve Leisman or Joe Biden or SEC is standing up for Michael shareholders. Never fear, Trump and the GE is here. Thanks a lot for listening, and we'll be back in 2 more weeks. Thank you.
Thank you.